Hi, I'm Ashley Daswa, and I'm a senior investment specialist within Sanlam Corporate Investments team. I'm here to provide you with a comprehensive account of the performance of the South African and global capital markets, as well as the macroeconomic overview in the second quarter of 2023. So let's dive into the key highlights. We continue to witness the interplay between sticky inflation, rising interest rate, and negligible economic growth. As such, the South African economy exhibited marginal GDP growth rebounded at a rate of 40 basis points, reflecting improvements in manufacturing, retail, and service sectors. However, challenges remain, such as depleting infrastructure, high employment, and fiscal deficits, which warrants close monitoring. The global economy continued its recovery path, but the pace varied across regions. Advanced economies showed strong growth, primarily driven by consumer spending and increased business activity. Emerging markets faced some headwinds, including inflationary pressures and currency fluctuation. South African capital markets performance overview in the second quarter of 2023. The South African capital markets experienced mixed trends. The equity market showed resilience during Q2 of 2023, with the JSE All Share Index recording a modest increase of 70 basis points. This performance was driven by strong performance in sectors like financials, technology, and consumer goods and healthcare. However, sectors such as mining and energy faced some headwinds due to global commodity prices fluctuation. Over the medium term, the local listed property is still notable laggard as it represents a geared play on economic growth and has had to de-risk and recalibrate. Local bonds performed well, but the real action has been on the developed equity markets, resulting in significant real returns in ZAR. Over the long term, double-digit or near double-digit returns are order of the day for growth assets, providing significant real return in excess of inflation, despite the look-star returns from local markets over the medium term. More defensive asset classes such as bonds and cash have lower real returns consistent with their risk profiles. The South African rand fluctuated in response to both domestic and international events. Economic indicators, political developments, and global market sentiment played a significant role in influencing currency performance. The global capital markets experienced a relatively positive second quarter of 2023, but uncertainty lingered, contributing to fluctuation in various regions. Global equity market performed well overall, with major indices in the United States, Europe, and some Asian countries reaching all-time highs. Robust corporate earnings and accommodative monetary policies supported bullish sentiment. World market experienced everybody in Q2 2023 with a positive 16% rise in the MSCI World Index in US dollar terms. This exceeded the most bullish forecast for the full 24 months in 2023. However, the stock market bloodbath of 2022 serves as a backdrop, and market levels are all of this 2 years ago. The fixed income market also witnessed the positive movements, with government bonds yields showing signs of recovery after a COVID period of volatility, and central bank actions to support economic recovery and continued stabilization. In conclusion, the second quarter of 2023 witnessed a mix of positive and challenging trends in both South African and global capital markets. While the South African equity market showed resilience, the global equity market reached record highs. The fixed income markets remained stable and the economic recovery continued, albeit at a varying speed across countries. It is crucial to approach our investment decision with prudence and consider the prevailing market conditions. Diversification, risk management, and staying informed about economic indicators and global events will be essential in guiding our pension funds to achieve their objectives. Thank you for your attention.